Hello, we are back. This is lecture number 225, right? 225. Our test is after lecture 228, okay? So you guys that online students can look on the red D2L calendar to know exactly when that final date to take it is. But just to kind of give you an idea of where we're headed, we have this lecture and 3 more lectures, and then we're going to take the test, okay? So let's dive right into the homework, okay? Quick study 18.6, 18.7, and 18.8. Is that correct? Is that what they were? Okay, let's take a look at those. You can see those on here, 18.6, 18.7, and 18.8. These were all pretty quick, right? On 18.6, the inventory categories are reported on the manufacturing company's balance sheet. A, raw materials, B, goods in process, C, finished goods. What's the usual order of these? Well, it's ABC, right? Raw materials is listed first, then goods in process, then finished goods, okay? All right. 18.7 wanted us to compute cost of goods sold for year 2013 using the following information. Okay, this is going to be like what's on your quiz next week, or our next period. Okay, we have a quiz next period at the very beginning. And I'll be asking you cost of goods sold equation for a merchandiser and a manufacturer, as well as differentiating between product and period costs. Okay, but let's go ahead and look at the answer to quick study 18.7. I think I have it on the computer here, because I couldn't find that page. All right, there it is. All right. Is that what you got? Did anybody get that? 980, 100? Okay, pretty self-explanatory. All right. Okay, 9.18.8, quick study 18.8. A company has year-end cost of goods manufactured of $4,000, beginning finished goods of $500, and ending finished goods inventory of $750. Its cost of goods sold is, what is the cost of goods sold? Anybody?
$3,750.
$3,750, just as shown there on the screen. Is that right? Okay. Pretty easy. Okay. All right. Now let's go back over to the document camera and take a look at 18.11. These were the items I wanted you to read about in your book. On I don't remember what pages were they. Maybe 749 and 750. Does that sound right? Okay. Perhaps.
749, 750.
Okay, good. So I said it right? Okay. All right, just matching. Okay, just-in-time manufacturing. Which one is that? Number 1 is
D.
D. You acquire inventory or produce it only as you're needed. You want to minimize how much inventory you're keeping on hand, because having inventory is expensive. You got to store it, got to insure it, got to guard it. Okay. Number 2, continuous improvements is what?
C.
C, every manager and employee is constantly looking for ways to improve the operations. All right. Number 3, customer orientation.
B.
B, okay. Flexible product designs can be modified to accommodate customer choices, right? Customer orientation. And then, of course, total quality management, number 4 is A, focuses on quality throughout the process, okay? So you're probably going to talk a lot about those concepts in other classes. Perhaps you already have, but I at least wanted to, bring those up to you. So, all right. Any questions on that, folks? Okay, let's go over the next one. This was 18.6. This is the one I wanted you to be real careful on. Following the instructions. Okay, so let's go through that real quick. What I want to do real quick is let's go through these items and let's decide first of all if they're a product or period cost. You with me? Okay, so the first one is factory utilities, right? And that is a product cost. Is that correct? Okay. Nope. No argument there, right? I think they might have done that one for us, did they? Okay. All right. Number 2 is advertising. What is advertising?
Product.
It's a period cost.
Period.
Very good. Okay. Number 3 is amortization of patents on factory machine.
Product.
That's a product. As soon as you hear the word factory or assembly or production or manufacturing, you know it's a product cost. So number 3 is a product cost. Number 4, state and federal income taxes.
Period.
It's a period cost. Okay. Number 5, office supplies used.
Period.
Also a period cost. Number 6, bad debt expense.
Period.
Period cost. Number 7, small tools used. Let's assume that these are used in the factory.
Product.
Okay. It is a product cost. Number 8, payroll taxes for the production supervisor.
Product.
Well, there's the word production, so it's a product cost. Number 9, accident insurance on factory workers.
Product.
It's a product cost. Number 10, depreciation on the factory building.
Product.
It's a product cost. Okay. Number 11, wages to assembly workers.
Product.
The product cost. Number 12, direct materials used.
Product.
That's a product cost. Okay, good. Good. Any questions on any of those? We're not done with it, obviously, but. Okay, now the next thing we're going to do is let's get my papers here, right? Okay. For the ones that were product costs, let's decide what type of product costs they are. If they're direct materials, if they're direct labor, or if they are manufacturing overhead. Okay? All right. Factory utilities, what is that?
Overhead.
Manufacturing overhead. Okay, it's obviously not direct materials, it's obviously not direct labor. Okay? Amortization of patents on the factory machine.
Overhead.
Manufacturing overhead again. Those are period. Small tools used.
Overhead.
That is overhead. And I've had people say before, isn't that direct materials? And I think their line of thinking is, well, these are materials that you use. Yeah, but they're not materials that become an integral part of the product, right? So this is manufacturing overhead, okay? Payroll taxes for production supervisor.
Direct labor.
Well,
Overhead.
it's not direct labor. It's manufacturing overhead, and the reason is this is the supervisor. This is not the person actually, touching the raw materials, doing the sawing, the drilling, the measuring, all that sort of thing. So this is indirect labor. Remember, indirect materials and indirect labor are always part of manufacturing overhead. Okay? Accident insurance on factory workers.
Overhead.
This is
labor.
one that is this is one that's a little gray. Okay?
Didn't you tell us some companies do it as the labor portion?
Yeah, some people do it as DL. Okay, now because this is on regards to the assembly workers. So some people do it as direct labor, and some people do it as manufacturing overhead. Okay? So this one's kind of one of those, it depends. Okay? I won't ask you one like that on the test or the quiz. But different companies do that different ways. Okay? All right, the next 3 I think are pretty clear. The depreciation on the factory building is what?
Overhead.
Manufacturing overhead or factory overhead. Wages to assembly workers,
Direct labor.
direct labor. And direct materials used are, of course,
Direct material.
direct materials. Okay? Questions on any of those? All right. Okay, now what we're going to do is we're going to look at that information we just did, and we're going to see if the item is a part of prime cost. Well, if it's direct material or direct labor, it is part of prime cost. Or is it a conversion cost? If it's direct labor or overhead, it's part of conversion cost, right? Okay, so let me just go ahead and put the answers up there. All your overheads are obviously checked in this column. Your direct labor is actually part of prime and conversion, and your direct materials is part of prime, checked in that column. Now, Luke asked a good question last time as far as, wouldn't a company either do what's the verbiage I'm looking for?
Manufacturing overhead.
Wouldn't a company either categorize with prime and MOH or with direct materials and conversion? Yes, they would do one of those probably and not both of them. But this isn't really asking for a specific company. This is really saying, like in regards to direct labor, it is part of prime cost if you do that, and it's part of conversion cost if you accumulate that way. Does that make sense? I've always thought the way they asked this question was just maybe a hair confusing, but. Okay, the next column was they wanted us to put, for all the period costs, they wanted us to put an X in that column. And then lastly, they wanted us to do what? Identify if it's a direct or an indirect cost. Is that correct? Mm-hmm. Okay. Now we're only doing this for product costs, correct? Mm-hmm. So for those product costs, let's decide if they are direct or indirect. I'll just put all the answers up there. Okay. All of the MOHs are indirect. The direct materials and the direct labor are direct. And then, of course, this oddball right here, well, if they classified as direct labor, it's direct. If they classified as MOH, it's indirect. Okay? So think of your direct materials and direct labor as obviously direct costs. And your MOH is indirect. Cool? All right. Any questions on that one? That was 18.6 exercise. All right. Cool. Okay, let's go ahead and go to 18.7. Let's see what it asks. 18.7 said current assets for two different companies at calendar year end 2013 are listed here. One is a manufacturer, Solomon Skis Manufacturing, and the other, Sunfresh Foods, is a grocery distribution company. Identify which set of numbers relate to the manufacturer and which to the merchandiser, and then prepare the current asset section for each company from this info. All right? Well, which one of these companies is the manufacturer? Company 2, right? Because you see those different inventory accounts. You see the goods in process, the raw materials, the finished goods, right? Okay? And then, of course, company 1 is the merchandiser or the retailer. Okay? So, that's pretty easy. Let's go ahead and take a look at what those sections of the balance sheet would look like. Okay? Let's take a look. All right. Well, the merchandiser is the Sunfresh Foods, and that's company 1, again, because they just had the merchandise inventory. Company 2 is the manufacturer, again, because they had the 3 different inventories: raw materials, goods in process, finished goods. Okay. So, any questions on that? That wasn't too hard, was it? Okay. All right. Then the final homework problem I gave you was exercise 18.8. Now, we did the Garcia Company in class, did we not?
Yep.
Okay. We did the Garcia Company in class, and what I asked you to do as homework was the Culpeper Company. Is that correct? So let's go ahead and take a look at that, okay? Let's go ahead and take a look at that. Okay, well, you can see the information for Garcia. We obviously did that in class. And this is what I want you to do at home for the Culpeper Company. Again, I want you to focus on the 4 steps. The 4 steps. And the first 3 steps have to do with the first 3 product costs. Step 1, we figure out direct materials used by taking the purchases plus the beginning raw materials inventory and subtracting out your ending raw materials inventory. Step 2, usually easiest step, you just put direct labor. Okay? Step 3, factory overhead. Now, did everything go there? I think there was, didn't they give us general administrative? Is that correct?
Yep.
We didn't put that in there. That's not part of FOH, right? And then number 4, we take the total of these 3 numbers, boom, boom, boom. That equals manufacturing costs, not COGM, but manufacturing costs. We add beginning inventory of goods in process, subtract out ending inventory of goods in process, and we get COGM. Now, I know we still need to calculate cost of goods sold here, but is there any questions on calculating COGM? Okay. All right, now let's figure out cost of goods sold. Okay, cost of goods sold. Now, obviously, this section is not on the cost of goods manufactured or the manufacturing statement. This is on the income statement, correct? Okay. And take a look at that. All right. Now, the COGM that we computed up here flows down to here, right? Okay. Now, I've taught this class enough. I know where students seem to make their mistakes. Okay. Where they make their mistake is often in this section and in this section. They get down here and they go, okay, I know I add the beginning inventory of something and I subtract out the ending inventory of something. I can't remember if it's finished goods, or if it's good in process, or is it both? And then they have that same discussion down here. Okay. Well, here's a little hint. We do this thing where we add a beginning inventory and subtract an ending inventory. We do that 3 times here, don't we? We did it up here, we did it here, and we did it here. Is that correct? Well, the order of things is the same order as items moving through inventories. We first add the beginning inventory of raw materials and subtract out the ending inventory of raw materials. Secondly, we add the beginning inventory of goods in process and subtract out the ending inventory of goods in process. And then lastly, we add the beginning inventory of finished goods and subtract out the ending inventory of finished goods. Doesn't that make sense? Because that's the progression. Is that correct? The other way you might remember is down here we're computing cost of goods sold. Well, what type of inventory do we sell? We sell finished goods, right? So I think that should make sense that the finished goods inventory balances are the ones that we're analyzing in our computation of cost of goods sold. Cool? All right. Questions on any of that, guys? Was that kind of fun to do? Yeah? I like to create fun in your lives. Okay? Okay, what I'm going to do now is, actually what you're going to do now, is I want to work on one in class. I've yacked enough. Let's go ahead and work on, I'll turn to it here in the book. Let's work on exercise 1812. Okay? This is another example or another exercise that has to do with preparing a cost of goods manufactured statement. Okay, so you can see a check figure down here for cost of goods manufactured. It looks like it's 534,390. Okay, but let's go ahead and you folks at home always do this stuff with us, and let's do exercise 1812. I'll give you a little time to do that while they roll that music. You guys can work together here in class. All right, so we'll see you in a little bit. right, let's go ahead and take a look at that. I'm just going to go ahead and put the whole thing up here. Again, and this is 1812. Does that look right? Can you guys see that? Check figure, yeah, 534,390, which is what the check figure was. Okay, so take a look at that. I'm happy to answer any questions, but it's mainly just more practice of the same thing, is it not? Okay. All right. Concentrate on those 4 steps. Okay. And I promise you that you'll have one of these to do when we eventually take the test. Okay? No questions? Okay, what I want to do is, let's go to the book. Look at page 748. I want to reinforce something that we talked about, but I want to show it again here. Okay? All right, so let's see if I can. Okay, 748. There is the cost of goods manufactured statement, right? Okay. And you get a cost of goods manufactured of 170,500. Is that correct? Mm-hmm. Okay. Now, where does that go to? Sometimes I'll even, do you guys know what tick marks are? I use these in auditing all the time. Here's what a tick mark is. I'm going to put a little A there. Okay, and then a little slash. Okay. And that tells me that that number goes somewhere else. That number goes somewhere else. And where it goes is, turn back to page 746. Okay? It goes to right here. Okay? It goes to right there. Okay? Now, maybe it would help to focus on just the section that I'm going to show you, which is the cost of goods sold section of this income statement, right? Remember when I taught you about how to compute cost of goods sold for a manufacturer? Isn't that the equation right there? Yep. The beginning inventory of finished goods plus COGM equals goods available for sale, less finished goods inventory equals cost of goods sold. Isn't that it? Right? Okay. And of course, where do we find cost of goods sold? We find it on the part of, on the greater part of the income statement. Correct? All right. So does that make sense? Another way of thinking about this is, remember, let me back up here. Let me highlight the main. Sales minus cost of goods sold equals gross profit less your operating expenses equals your net income. I mean, that's the basic structure, right, of an income statement. Okay? But I like to do these tick marks because when I am looking at that, studying, and I'm saying, oh my goodness, where did that number come from? I can't figure out where that number came from. Well, if I see that little tick mark, I know, well, that came from, I've identified before where this came from. And sure enough, it came from over here. Do you see what I'm saying? You following me? Mm-hmm. Okay. Now, another thing I want to point out on this income statement is these operating expenses, these are where we put our period costs. Remember when we talk about period costs? That's where they go. Now I want to point out something real important here. In this textbook, they like to differentiate between selling expenses and general administrative expenses. And then they like to do a subtotal for total selling expenses and total G&A expenses. I always have students who will say, okay, I know that I have a miscellaneous expense, and I know it is, well, that's probably not the best example. I know I have office supplies expense. I know it's a period expense, but I can't decide if it's general and administrative or if it's selling. Listen to me. I don't care that you differentiate between selling versus G&A, as long as you know it's a period cost. Does that make sense? So looking back at this, you don't need to do your subtotals. You could have just listed all your period costs here. All right. Now you're going to do for homework tonight. One of the problems you're going to do is problem 18.7a. You don't need to write that down. I'll give it to you later. But problem 18.7a, and I'll ask you to do requirement number 1 and 2. But they're going to ask you to subtotal your selling versus your G&A. I don't care that you do that, as long as you can properly classify things as period costs. You following me? Okay. All right, any questions on that, guys? Now remember, you've got a lot of stuff out there on Connect right now, right? Well, you've got those Connect mini projects, okay, over chapter 16 and 17. You also have 2 Connect assignments over chapter 18. I think I say chapter 18 part A, chapter 18 part B. Neither one of those takes long, but make sure you do those, okay? Has anybody done those already? Okay, good. All right, what we're going to do in the remainder of this class period, we have about 12, 13 minutes. We're going to actually start on the very beginning of chapter 19, job order cost accounting. Okay, so job order cost accounting. Take a look at that. Okay. Now, as always, I encourage you folks at home to print out these PowerPoints so that you can follow along with them as we go through the lecture. Okay. So let's talk about job order cost accounting. Now, first of all, let's skip ahead a little bit and discuss what we're going to talk about eventually when we get to chapter 20. Now, this is not what we're going to cover in chapter 19. This is what we're going to cover in chapter 20. Chapter 20 has to do with process cost accounting. Okay? It has to do with items that are mass produced, such as all the examples that you see on the screen. Okay? And these items are pretty much identical to each other, are they not? Right? If you buy a can of Pringles, Jeremiah, it's going to be pretty doggone similar to the can of Pringles that Blake buys. Is it right? Okay? Same thing with all of these items. Okay? These items that you see on here, this is process cost accounting in chapter 20. These are continually produced, are they not? As a matter of fact, as we sit here right now, don't you probably reckon that they're producing these units somewhere in the world? Okay? Now that's chapter 20. We'll talk more about that when we get there. Well, what are we going to talk about in chapter 19 if we're not going to talk about these types of items? Chapter 19, we are going to talk about something that we call job order cost accounting. Job order cost accounting. This is for the production of large, unique, and most likely high-cost items. Not always high cost, but they're always large and they're always unique. Okay? These are items that are built to order. They are not mass-produced. They are built to order. Okay? And we'll see that many items can be directly traced to each job. Well, some examples of this. Okay? Has anybody ever, you or your parents maybe ever had a house built? Yeah? Blake, your parents had a house built? Okay.
No, I built my own house.
You did?
Yeah, my bare hands.
Seriously?
No, my parents had their own house built.
Okay, I was thinking, if you're that good with construction, I'm going to have you come over to my house on a weekend and you can help me. But your parents had a house built?
Yeah.
Okay. Now, think about that, Blake. That house, how old were you when they built that? Do you remember it? Were you old enough?
I was months.
Just months old?
Yeah.
Okay, so you probably don't remember it. But when you go through the process of having a house built, it's a long process. Has anybody known somebody who's gone through it? Mm-hmm. You got to pick out the wallpaper, pick out what carpet do you want in the living room, what sort of handrail do you want down. I mean, it's just a constant barrage of making decisions, isn't it? Now think about it, Blake. That house that your folks had built, there is not another house like that in the entire world, right?
Right.
Now it may be a similar floor plan, but their choices of wallpaper and paint and cabinet knobs and hinges and all that sort of stuff, I think it's safe to say that it is unique, and there's not another one like it in the whole world, right?
Right.
Going back to the slides, that's an example of something that would be produced in a job order cost accounting system. It was a large item, it was unique, and certainly was high cost, I'm assuming, right? Okay. Another example would be on campus. We have this. Have you ever seen this Nerman Museum? Okay. There's nothing like that in the world. That's a large, unique, high cost item built to order. Okay, and that would have been handled as well in a job order cost accounting system. Another example would be like an in-ground swimming pool. Correct? All right. Now here's a couple of examples of something that they are unique, but they're not necessarily large or high cost items. And that would be like yearbooks or wedding announcements. Now those are kind of built to order, right? But they're not real high cost. Now, they do produce more than one of these. Now, with these items down here, they only produced one of them. Is that correct? Mm-hmm. To those specifications. Whereas, with a wedding announcement, they might produce, 300 of them. With a yearbook, they might produce, 1,500 of them. Okay? Now, these two situations, this is what is known as a job lot. Okay? A job lot is when you produce an item under the job order cost accounting system, but you don't just produce one. Now, you don't produce millions, but, you might produce, 300 of them or 1,500 of them. Okay? Now, these items down here, these are called just jobs. So these are job lots, and those are jobs. Make sense? But one thing that all of these items that you see on the screen have in common is this. They are built to order, correct? They are built to order. And because of that, these are not mass produced, are they? Are they creating yearbooks just, by the thousands and thousands somewhere? No, because it depends on what that school wants in their yearbook, correct? Same thing with swimming pools and museums and houses. Now, I think one of the key things to differentiating between job order versus process is the order of events that occur, okay? So this is a house, this is a little family that's having a house built, right? Blake, that could be you right there, couldn't it?
That's too short.
That's maybe you when you were like 1 year old.
I was born this height, dude.
Were you born that height? Okay. Blake is very tall. How tall are you, Blake? 6'9"?
6'8", yeah.
6'8". Okay, well, maybe you're 6'9". You're still growing a little bit. Okay? So maybe that was you, Blake, when you were like 1 or 2 years old. But here is the key. The very first thing that happens in a job order cost accounting situation, nobody does anything until the order is received from the customer. Does that make sense? Because look, let's go back a slide. Did they start production on any of these items before the order was received? No. Now let's contrast that once again with chapter 20. Are they waiting for specific orders before they produce these things? No, they're just producing them as we speak. Night and day. They know somebody's going to buy that bottle of Scope. They know somebody's going to buy that can of Pepsi. They know somebody's going to buy those pencils. So they just mass produce these. But on job order cost situations, the very first situation that occurs is they receive the order from the customer. Then they schedule the job. Then they order the materials. And then they begin production. You with me? That is the order. So whenever I can't differentiate between job order and process, I just ask, do they wait for a specific order from a customer before they start to create it? Or do they just create them all the time? Okay? All right, you can come off that. Okay, any questions on that? Let me go through one last slide, and we will come back to this, but I want to kind of give you a preview of things to come. This is a job order costing situation, and what we're going to find is that we are going to accumulate costs for a job. Again, think of Blake's house. Aren't they going to accumulate a bunch of costs that were incurred in that job so they know how much it eventually did cost them? Well, they're going to have materials costs. Now, direct material costs can be directly traced to the job that's in process, the goods that's in process. Okay? Now, if it's an indirect material, you can't directly trace it to a job. And what you're going to do is you're going to accumulate it in the factory overhead account. Similar situation with labor. Now, if it's direct labor, you can directly trace it to the job in process, or the goods in process, by nature of it being direct. But if it's indirect labor, you're going to once again, just like indirect materials, you're going to accumulate it into this factory overhead account. Now, you cannot directly trace, okay, to the job, okay, for factory overhead, okay? You cannot directly trace factory overhead to goods in process or the job in process. So what we have to do is allocate it, okay? Or sometimes we call that assign it, okay? And again, this is a preview of things to come, but I want your brain to start thinking about this, all right? Then once the goods in process or the house, once it's done, it becomes a finished good. And then once the finished good is sold, it moves from the balance sheet, from finished goods inventory, over to the income statement when we decrease finished goods inventory and we increase cost of goods sold. Make sense? Okay. A little preview of things to come. All right? So, any questions? Let me give you your homework that I want you to do. Okay? All right. Remember to do all that connect stuff, by the way. Here's what I want you to do. I want you to do exercise 1813, okay? And I want you to do problem. Now, we don't always do the problems, but the problems are listed after the exercises, right? I want you to do problem 18-7A. I want you to just do requirement number 1 and requirement number 2. You do not need to subtotal your selling versus your G&A on this one. This is that one that I was speaking of earlier, okay? That is it for homework, except I want you to remember that we do have that quiz. And the quiz will be over the cost of goods sold equations for a merchandiser and a manufacturer. And also I'll give you some items and I'll ask you to determine if they are product or period costs. So that is the homework. Any questions? Yeah, Daniel.
So we should know the equation for merchandising, cost of goods sold.
Yeah,
For the quiz.
for the merchandiser and for a manufacturer. And isn't that like on that third to last slide on chapter 18? Okay. Yeah, on your slides. So, all right, any questions? Hey, see you guys later. Bye-bye.